Live from Music City in Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, aspirational, international, daily created, highly anticipated edition of the afternoon swing trading floor with your humble host, Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. Welcome, welcome, folks and friends. Team and family, fans and followers from around the globe. Hope you're doing incredible. It's Tuesday, Tech Giant Tuesday, election fight nights. Yeah, that's kind of it, right? Even bigger than the Super Bowl, allegedly. What do you guys think? Which one has more impact on the world? Who the U.S. president is or the World Cup? What do you guys think? When they both happen every 4 years. It's a good question, right? Oh, man. Allison says the World Cup is more highly watched and allegedly more people vote for the American Idol every year than the president as well. So that's kind of an interesting little random factoid. Okay, so a few small things to talk about in essence. Obviously, we're bouncing from a very, very good spot to bounce at. And I think a lot of traders, I will do my best to kind of go through some protective put information. I do have tons and tons of videos, loads of resources, courses everywhere. But I guess just to reiterate, I got more questions today about protective puts than I've ever gotten. So I figured, hey, let's spend some time talking about it and just go through what they are and how they work. So here we go. Protective put. It's not special, folks, at all. It's a long put. That's it. It means you buy it. Okay. And you buy them when you want to protect a stock from going down. That's it. That's what a protective put is. Now, you generally want to buy these on big up days. Up days. That's when you want to buy puts. Like today, for example. You want to buy them on up days, not down days. Down days is when you sell them to lock in profits. You want to buy them on up days. You also want to buy puts and or protective puts when you are profitable on the position. It helps with timing. Now, here's a question. Can you, ladies and gentlemen, buy a put on something you do not own? Yes, you can. Right? So again, just to reiterate, I do have free information on YouTube on how to trade options. I also have an intro to options course that's $99. It's worth the money. I have all the information. I have PDFs. You can Google it. It's on Investopedia. Whatever you want or need, I can help you with your protective put strategies. But long story short, you do not have to own positions if you don't want to own. You don't have to buy puts if you don't want to, but you can. I normally buy puts on up days. For example, when we get up in here into a nice resistance and the market's nice and high, that's a great time to buy some puts, right? Edward says hedging with options is a must during the Black Friday sale. Yeah, I agree. I agree. Because again, here's the thing. When you buy a stock, we all know how buying stock works. Okay. So you buy a stock here, stock runs up, then you buy some puts. So Tyler's saying, what expiration do you buy those puts? This is just going to be a personal answer. It can be, depending on everyone, different. I buy my puts and or protective puts or protective puts for 2 months or less. That is the answer to the question. Now, why do I only buy puts 2 months or less? What's your guys' thoughts? If you had to guess, just off the top of your head, why do I do it that way? The reason I said this is my opinion, right? Why do I do it this way? It's cheaper. That's correct. You spend less money on theta. That's correct. And I'm a permable. It's absolutely right. Markets go down faster than they go up. So you don't have to really spend that much time on options. When the market drops, it drops. So you don't have to buy 9 months or anything. It takes a long time for the market to flip and go higher sometimes. You know, like sometimes it takes 3 whole days for the market to go higher. I mean, what a terrible tragedy that would be, to have to buy at support and wait 3 days to start making money. God, that would suck. But when you are buying your puts, I buy them 2 months or less. Don't overthink that, my friends. 2 months or less. Now, here's the important aspect of puts I think people have incorrect. When I buy protective puts, now, if I just have a regular put, any put option that I buy, I am willing to lose 1R on the put. If it is a protective put, I just leave it alone. I don't pay for it if I don't want to actively trade it. Do the math. It's really easy. Spend 9 minutes doing some math to figure out, are you going to, or can you make more money on the upside than the put costs? So as an example, let's just go look at Tesla. All right, so we're going to go look at Tesla because yes, I'm in puts on Tesla. Yes, I'm losing on those puts. And I got about, not exaggerating, 175 messages today about what I'm going to do on my puts on Tesla. So I have long calls on Tesla and I also have shares on Tesla. The puts that I purchased are simply a hedge on these long calls and the shares. So what I do, and again, you guys don't have to be in this exact position. I'm just kind of outlining how I'm playing it. I have about $300,000 in Tesla right now across all things, shares and options. I have about 300,000 in Tesla. Okay. So I'm going to be protecting it with puts. Let's say you have $30,000 in Tesla. You could still protect it in puts. Well, if you have $3,000 in Tesla, you can still protect it with puts. You don't have to. The less amount of money that you have invested, the less you should hedge it. Does that kind of make sense? I mean, that should be generally obvious. Like if you have $3,000 in Tesla, you don't really have to hedge it. You have 3,000 bucks. Like just let it do its thing. Like it's $3,000. That's not that much money. There's no need to hedge $3,000 investment. I mean, that's what, not 7 shares? And I'm not making fun of it. Guys, that's totally cool. You can be in 7 shares. I'm just saying you don't have to hedge if you have a very small investment. Type in a 2 if that makes sense. Okay, so when I'm talking about hedging, I'm just letting you know, and I want you all to know this, we have at least, to my knowledge, here in this class right now, looking at the chat pane, 50 traders that have millions of dollars in the market. Okay, if you're not one of them, that's okay. It's not a big deal. Don't stress about it. You will get there. But looking at the chat pane right now, I know you because I work with you. I've worked with you in the past. We've worked at some point in the future. We've talked about it. There's at least 50 people that have millions of monies in the market, or the ability to have millions in the market. So when I talk about the hedging and all that kind of good stuff, it's all kind of come down to your positions, your plan, your P&L. I can't trade for you. I don't know what you're doing. I just want us all to be really cognizant that if I'm buying puts, it doesn't mean that you have to buy puts, especially if I say, hey guys, I'm gonna be hedging on some puts. I'm gonna be buying some puts as a hedge. Just simply means if those puts go to 0, right? Oh, let me draw this again. If Tesla just goes to the moon and I lose on my puts, the math that you want to do is anytime you buy a protective put, can you make more money on the upside than you're going to be losing on the put purchase? Now there's all kinds of ways you can get really creative. And I can't go into that right now because that's what the Hedging with Options course is about. There's tons of ways to get creative. So I do have a dynamic super collar on Tesla for those who've gone through the Hedging with Options. So I do have a dynamic super collar. I got all kinds of fun things on Tesla. So the higher it goes, the more money I make, but I have some protection on the downside. Now, if you buy an option, let's say that option costs $3,000. Because I think that's about what the $400 put cost on Tesla. If it costs $3,000 for one put, you have to ask yourself, how much of this is an R for you? Right? If you're trading a $50 risk unit, you shouldn't be trading Tesla. Or you shouldn't be actively trading Tesla and just own some shares and leave it alone. Right? Does that kind of make sense, guys? And again, that's not a negative statement. That's just me saying, hey, if you have a $50 risk unit and you're newer to trading, just take it slow, right? Don't worry about it. Don't trade Tesla. Be in it and own it. I'm all for owning Tesla. I'm all for it. Like, I am in Tesla long. Like, I got it. I'm ready to go. But if you're an investor and you have a $50 risk unit, you would have a $50 trading unit and you're actively trading and you're trying to learn the strategy of trading actively, but you only have an investment in Tesla and then just leave it alone, right? Trade your $50 risk unit, learn, build up, grow, and the world's abundant. Tons and tons of opportunities out there to make money. But if you invested $3,000 on these puts at $400 November puts, my question is, can I make more than that if Tesla continues to go higher per option? And the answer is yes. So in general, my big key with any kind of put purchase that you do is just sit down, do the math, and ask yourself, what is your goal and objective with these options? And don't go too heavy on protective puts. I generally lose 90% of my protective puts. So when I say I lose, I mean 90% of my options, that's when I lose. I get my puts, I buy them, and I end up losing on them. Now, I did break a rule. Well, let me rephrase. I didn't break a rule. I did not properly, amazingly time the put purchase on Tesla. All right. I did buy some puts up here, and I did sell some calls up here. But when this candle came in, I mean, for all intents and purposes, it is I'll clear this for a second. It's a bearish gap and go. Right, you guys see that? White candle gapping down, inside day, open below, close below support, close below the 50 EMA, close below inside the Bollinger Band. It was a Bollinger Band squeeze. You had 4 signals to potentially be short on Tesla. Not to mention, Momo was still short on that day, right? So Momo was in short on Tesla. Everything was saying, hey, short Tesla. So I had some Tesla shorts, and the puts are not going to work. I hope. I don't want the puts to work. I want Tesla to go higher. If Tesla goes higher, I will make more than I lose on the puts. You just have to do the math and make sure you're okay, because I generally sell puts against my long puts, and then I let those expire worthless. So this is oftentimes what my structure looks like, is I'll have long puts, and then I'll have sold puts that create a bear put spread strategy, which is what I talk about in hedging with options. So this is the bear put spread. And that's normally what happens. And I just let it expire worthless. Yeah. I buy it as an insurance contract. The insurance contract just helps me sleep at night. I very rarely make money on my long puts, on my protective puts. Very, very rarely. If I do, so let's say Tesla does this, and trades down to the 100, I would simply exit this strategy for a little bit of a win. I would take the puts, I would create cash flow, I'd make a little bit of money. And then if it bounces off the 100, awesome. What if it doesn't bounce off the 100, my friends? What would I end up doing at that point? Yeah, I would just buy another put. Exactly. So if it comes back here and it breaks lower, then I just get into another put. How much time would I buy? 1 to 2 months. Yep. 1 to 2 months. And then what strike price do I buy? And the answer to that is, it all depends on where you bought the stock, right? Where'd you buy the stock? If you bought the stock lower than where you're going to buy the option, you can't go wrong. So just do it. It's the easiest thing in the world. So if your cost of basis is 260 on Tesla, Literally any put that you buy is fine. Otherwise, I just normally buy at the money puts. It's nothing special. You can go at the money, 1 to 2 strikes out of the money. So it's a little bit cheaper. I guess it depends on how much you love the company and all that kind of good stuff. But I am absolutely 100% losing at this point, 50% of my protective puts on Tesla. Mike says, so your protective puts are usually an absolute zero hedge. That is correct. Almost always an absolute zero hedge. I'm only buying them as all right, well, just in case this happens, I'm going to be in it and I'm not going to worry about the put. I do the math, I figure it out, and I go, okay, cool. This is my worst case scenario. All is good. And then, right? And then when it comes to the actual option itself, the actual put, I still think that we could have some weird volatility over the election. I'm not saying it's going to happen. I'm just saying it could. So I didn't get out of my Tesla puts today because election is tonight. That would be the dumbest thing in the world to get out of the put today for a loss, especially if Tesla, let's say Tesla opens down here at 380 tomorrow. I'm not saying it will. I'm just saying if it does, why would I exit my long protective puts today when election is tomorrow? That's why I bought the puts. You know, I bought them because elections tonight. I have no idea what's going to happen. No clue. Is the market going to do absolutely nothing and have a giant nothing burger? Maybe. Is it going to gap up? Maybe. Is it going to gap down? No clue. I had no idea. So I'm in all my long-term, all my protective puts. I'm going to be in them until at least tomorrow. And then once I get an idea of whatever happens tomorrow, whoever potentially might get elected tonight in the US, whatever fight happens, whatever breakout, whatever cool terminology, whatever, I can then just sell my puts. And if I buy my option for $3,000 per contract and I sell the option for $1,000 per contract, how much money did I really lose? And I lost $2,000. So I didn't actually lose all of $3,000. I would have lost, $1,000 per, lose $2,000 per contract. Does that all make sense, team? Now, again, I don't want to, I'm not bragging at any stretch of the imagination. If you do not have 6 figures in your account, you should not really massively worry about all of the hedging. Just kind of be in it and be patient. Just be in, and like if you got $50,000, phenomenal. You guys all know I started with much less than that, right? I took $9,000, turned it into about 15, convinced my dad to borrow his money. That turned into 108, lost all of that, and I was in the hole a lot. Okay. So just bring that up to the extent of you can start with a small amount of money. That's fine. That is okay. I've been doing this for going on 12 years now, and I've caught some really good trades. I've got really lucky a few times. And I was trading Shopify at 20. I mean, come on, guys. It's $1,000 a share right now. Square at 9. I flew to New York when Tesla was at 150 and said, hey, to the whole world, be extremely bullish on Tesla right now. You guys don't think I made money on Tesla at 170? JS says, what's the next Shopify? That's the next question. I would say watch class 4 of the advanced series, my dear friends. Yep, watch class 4 of the advanced class. Jason says, I remember your video selling puts on Tesla for $100. Yes, indeed. So I guess my overall thought process is this. The reason I'm bringing it up, just be patient. You don't have to know everything or learn everything that I do. It's totally fine. It's all good. Don't stress about it. If you need or have any questions about your account size or where you're at, you can always reach out to me. You can just text me, shoot me a message. I'm not an attorney. I'm not here to make money off of every minute or every hour or whatever. I will easily help someone for free. If you have a question, just reach out to me, folks. I'm not on a pedestal. I'm not better than you. I'm not richer than you. I'm not smarter than you are. I'm just a human being just like you are, and I'm happy to help, right? If I know we can make a lot of money off the transaction, I'll charge you for it. If I know that you can't make any money off the transaction, I won't. You know, it's not a big deal. It is perfectly cool. Don't stress about it. So in general, that's how I play options. And if you want more on this video, just go into real life trading, or sorry, go into YouTube and type in protective put real life trading. The video is free. It's totally free. You just go watch it right there. I explain all of this in depth. Any option trading, I've been very clear that this is all free. Learn the collar. I mean, it's all free. The hedging with options class just goes into more depth details in math, right? We have slides. All of this is, hey, let's just create the content for the world. So the reason I'm bringing all that up, no idea what the market does tomorrow. If I lose on my options on Tesla, phenomenal. Guys, I hope I do. Man, I really, really want, since we're talking about Tesla, this and this, because if this happens, the $10,000 that I'm going to lose on protective puts is nothing in comparison to how much potentially I'll make if Tesla goes to 550. If Tesla goes to 550, I'll probably make 700 grand. You know, and I'll probably donate half of it and move on. So it's all good. It is all good. It's cool. Life is cool. Awesome. I like it. That's my thoughts on Tesla. Buy the dip. This today was an amazing, amazing gap. Amazing gap. Allison says, I'll be stoked if Tesla goes to 550. It will. The question is not if, it's simply when Tesla gets to 550. Yeah. Tesla can't trade sideways this long without going higher. There's still a lot of growth in this particular company. A lot of goodness to happen. Joseph says, this is a retest gap. Exactly. So tomorrow, let it gap down potentially. And then 2 or 3 days later, we'll see what it does. And we'll go from there. All right. So that's Tesla. That's just kind of my analysis. I won't be doing a weekly options newsletter tonight. I will do a weekly options newsletter tomorrow. I'll send that out in an email and I'll post that in Slack for obvious reasons. No reason to set up a trade. And, you know, if we're gapping up 900% tomorrow or gapping down 3,000%, and, you know, the market's at zero and the stock market doesn't exist and internet and electricity no longer work tomorrow, then there's no point in setting up an option trade. But if all things don't do that, which they won't, then we'll just do one tomorrow and set up a really good trade, hopefully. But yeah, I do like Ricky's trade on Micron. I think it's really cool. I think it's a great setup. I really like the entry, and I was a fan. So let's see how the market reacts to whoever gets elected. There will be a president sometime in the United States in the next 3 months. Guaranteed. All right, AVYA. Now, this was drawn a few weeks ago. Well, sorry, not a few weeks ago, October 26th. So the squigs showing off his handiwork, and yeah, it looks good. Looks very good. Jason says, speaking of Ricky and the Aussies, I just learned today it's a federal requirement over there to vote or you'll get a fine. Should absolutely be that way here, man. Should absolutely be that way. My boy Mark, give me some information. Thank you, Mark. He said, the planet Mercury resumed forward motion today. We made it through that. Oh, good to know. Good to know. Jill says, did you vote? Indeed, indeed. I wrote in Jason Smith for president because I want Jason Smith to be our president. that would be the easiest, the most no-brainer thing of all time. Yeah, I really like the pullback, old resistance, new support, 1652. So, I mean, if you're buying AVYA here, this is where you would. And again, the election is just going to be a giant question mark. So I don't have tons and tons of official swing trades. We'll wait and see what it does. Tomorrow will be very interesting. After tomorrow, I'll be good to go. Tomorrow we'll just start setting up some trades and expect a little bit of volatility, but it should, I mean, finally it'll be dying down. New Relic. Now this is cool because this one does have earnings soon. And this thing has been flatty McFlatterton. So what I was actually thinking on New Relic was to buy an out of the money call option with an absolute 0 on New Relic, just in case it gapped up on earnings. So, you know, risk an R for a $75 call. 1R absolute 0, $75 call. Now, here's obviously something I'm trying to figure out is like a trade like this. I plan on doing it. I've just had trouble putting all the things that I do in the trading journal. Because I don't want everyone to think that they have to be in every trade, you know, like every trade that's there. Like if I had to do one trade a month, I could do that. I could do one trade a month, including day trades. I could do just one trade every month, but that would be really boring for a lot of you guys. So I can also do 100 trades a month. I could do 1,000 trades a month. That's why my R is 1,000, by the way. It's not because I have a $100,000 account. It's so I can trade a lot. So I can take a bunch of trades. I like trading. Is that a good idea? I don't know. It works out. It does. But anyway, people should know their limitations, says Joseph. Yeah, pretty much. So I like New Relic. It's a really interesting play. This is like a just if it gaps up, because that is the coolest inverted head and shoulders pattern I've ever seen. Right? Isn't that awesome? Greg wants to know what call this would be. Up to you. I would just go November, but if you want to do a longer term, you can. JS says less is more. Always, dude. Always. Always, always, always. One rule or strategy, if you guys ever want to test out your skills, type a 9 into the chat pane if you think you trade too much. We'll see who types in a 9. Edward typed in a 9. So if you think you trade too much, come up with this strategy. You ready? And this is for November. This is for November. Do 19 trades all month long. 19, including day trades, swing trades, new trade, just getting into a new trade, 19 all month. And just see how it does. Starting tomorrow. Yep. Starting tomorrow, 19 trades. If you think you trade too much, just do 19, including every type of trade you could possibly do. Make that your max and just see how you do for the month. See how you do. What do you guys think? Edward says done. All right. Okay. So NEWR doing its thing. All right. Next on the list, Stone Co. Steve Austin. Stone Co. Limited. Big fan. Earnings are out. I like the consolidation. I love this compression. I love this compression. Mark says that's like 2 months for me. And which tells me, Mark, you should try to trade more. Just to push yourself out of your comfort zone. That's all. Not that you will or will not lose, or you will or will not win, but sometimes it's good to flex both strategies. Like you guys know, I'm a runner. I like running. Today, I did a kettlebell workout and I am toasted. Like my legs are shaking. I do not have any of those muscles required to do that workout. So just kind of really plan on how you can dive in and just stretch yourself ever so often. Someone was asking in Slack why we do the challenges every month, and it's because I want to stretch us. I want us all to do things differently. I want us to all focus on different things. I want everyone to practice new things and grow and take your mind to places that hasn't been. Because if you are not a millionaire and you want to be a millionaire, you're going to have to do things that you've never done before. Whatever it is, you can pick a random month where you go, okay, my average is 3 trades a month. I'm gonna do 30 this month. Why not? Just see what it does. Maybe lower your R some. Okay, that's fine. Just to try it out. And then if you take a lot of trades in a month, you go, okay, let me just dial it down and see how I do with this exact amount of trades. So yeah, really, really just try new things. Try it. I think you guys will love it. STNE, I do like this chart a lot. A lot. I love this chart. It has everything I need. Now, the crazy part about trading, in my opinion, the part that I want to emphasize, I get the struggle. I understand why you're all here. I fully realize that we all want to make money trading. You could find a chart like this, a company like this, fundamentals like this, pyramid in, and literally do nothing else until May of next year and probably make more money than you were doing extremely active. So I want you to know that. Now, if you're like, well, what's the point of even being here then? You don't have to be. Number one. Number two, if you want to be, sometimes it's just about seeing this particular pattern, seeing this one stock, seeing that one trade, being able to put in some money and just tracking that one company. Remember, we have a lady who I've been working with. She always goes nameless. She's always anonymous, but she trades only CSX. That's it. Every single day, every CSX, that's all she looks at. And she's been trading with me for the last 8 years, every single day. I say trading with me, like, I mean, in the rooms, in the afternoon rooms, it's not like we're actually trading. JS says trades it every day. Yep. CSX. Well, if she sees the pattern that she likes, she'll trade it. But, she focuses on just one stock is kind of what I'm bringing out. And I dig it. It's really, really interesting to see it play out. Edward, don't you do that to me. Don't you do that to me. Edward says, I have Stone Co-Limited, Pins, and Snapchat. Which one would I choose? Oh, okay. If I have to choose between these three, I've got to choose Pinterest. And here's why. The volume, the gap, the trends. I know the company very well. I've studied this company intensely. I've done pretty much everything you guys can do regarding going into a particular company and analyzing it and trying to determine what it's going to do. I've gone to other analysts. I've asked their opinion. I've done pretty much everything you could do on Pinterest. So I'd have to choose Pinterest. And since one of my IRAs is literally just in Pinterest, it would bode to the extent of I could have just done that all year. If I could just 2020, I could have traded nothing other than Pinterest and I'd be fine. Because remember, the whole don't put all of your eggs in one basket, that's a scarcity mentality. Always keep that in mind. If the basket can't break or you have tons of chickens to make more eggs, it doesn't matter. Because there are CEOs and CFOs and CTOs that are all in one company. Like the CEO of Pinterest doesn't have a bunch of holdings in a bunch of other companies. They're in Pinterest. Like they're in it. And when you bring up the whole, what about Enron? What about Blue Apron? Yeah, there is a point where you bail and go, that sucked. But you're not going to lose all of your money. I know I'm on this Pinterest train way too often, but I will get off in just a second. Over here, but really, really, really specifically right here, I know there's many of you weren't trading with me in March, but just to kind of bring it up, when Pinterest got down to the single digits, like almost 9, I told everyone, guys, if it breaks these lows, I'm going to buy as many puts as I can afford on Pinterest. I'm going to probably buy $10,000 worth of just put options. And if it goes to 8, I'm going to sell all of my shares for a loss and then just hold on to the puts. And then apparently I was wrong on Pinterest and I will lose 60 grand if that happens. I will take a realized 60 grand loss if that occurs. So I was telling everyone, like when the whole COVID situation was happening, I could not figure out. And let me know if you want me to go back to a recording of back here. Let me know. I'll send it to you in Slack. I could not figure out while we were dropping on Pinterest and Facebook and Snapchat and all the social media companies. I'm like, this makes no sense. Bitcoin was dropping, everything was dropping, and I could not figure it out. So I was like, man, this is the weirdest thing. So anyway, I was like, well, guys, if this thing breaks, I guess I was wrong. I guess this thing is going to go to 0. But is it really? And the answer is not, probably not. Like if you go look at 2 companies that I was wrong on, ready? Here comes the wrong train. Choo choo. Newsom was incorrect about Blue Apron. I know a lot of you guys like to laugh at me in this, and that's cool. But my Blue Apron theory for this can't go to 0 started around here. Here-ish, somewhere in the red circle. I was like, guys, this is not going to go to 0. So I tried it and I tried it and I tried it. Now, what do you guys think? Is Blue Apron at 0? Nope. It's not. I mean, it's not good. If you had bought any amount of anything, you're losing on it for sure. It is not good. Yes, I tried to pick the bottom. Yes, I was like, well, this IPO is not going to just open and they're going to let it go to 0. And they haven't. They did a reverse split. I was right on that. The stock is not at 0. It did get down to $2 during COVID, and then went from $2 all the way up to $10, which is a lot. And now it's dying again. Can't figure it out. Whatever they're doing incorrectly. But I started doing some market research. I ordered some Blue Aprons. I bought them. I spent my money on Blue Aprons. I took some day trades. I did this, I did that. And I didn't like it. I wasn't a fan. The customer service kind of was like blasé. So I exited this trade and I did lose R's on Blue Apron, but I cut my losses way back here in like whatever this was, April, May, March, 2019. I was like, okay, cool. Looks like I'm done. I will always share the losses with you, team. I promise. Always, always. I will not gloss over those. So Blue Apron lost some R's. It did not bounce. It did not go to 0. And I did lose some R's on Blue Apron. Now, Lending Club. Is Lending Club at 0? No, it is not. Type into 7 if you think Newsom thought this was exhaustion volume and started playing Lending Club bullish throughout this orange section. Right? I was trying to play Lending Club. I was like, they're not going to let this IPO go to 0. Lending Club does something, blah, blah, blah. I thought it was exhaustion volume. I was playing that channel and it did jack squat. Absolute horrificness. Like it just was bad. And so I ended up cutting bait and running somewhere over here, late 2017. I was like, okay, well, that sucks. So bye-bye. And I lost some R's on Lending Club. Not a lot, but some. I used it. I tried the product. I went into their company. I did the whole thing. I invested both time and money, and it was garbage for mostly garbage, 97% garbage. So you can take those losses, but like my boy Sebastian says, I hope I'm saying that right. I'm probably not, but I hope I'm at least close. So Jean says, you can have all your eggs in one basket and still be diversified. Would you guys agree on that? You can still have a lot of eggs in a lot of baskets, or a lot of eggs in one basket, like your boy Bezos. He is in on Amazon. That dude is in this to win this. And I heard the rumor, I don't know, I haven't fact checked this. I think he's the richest man in the world who has zero diversification. Saying that slightly tongue in cheek because Amazon is diversified. You know, so Amazon in essence is diversified. But I know a lot of you may or may not have been trading during this time. I was, and I was still dumb and new. But back when Amazon was $200 a share, no one, and I mean no one, liked Amazon bullish fundamentally. I say no one, again, slightly tongue in cheek. Obviously, there were people who did because the market stocks just kept going up. But back in 2011, 2012, I was at tons and tons. Remember this one, Jason? Jason remembers. We went to a webinar together where one dude was like, Amazon's it's going to zero. This is why Jeff Bezos is getting together with the Federal Reserve and JP Morgan, and Bezos is going to blah, blah, blah. And they are all just bare. It's not making money. PE ratios are through the roof, and it's going to go to zero. And here's why. And I was like, really? Man, I see them everywhere. And they got the smile. I mean, you know, A to Z, they got the smile thing going on. I'm like, that's a great logo. People are buying things from them. I was like, man. Jason said, I thought the dude was off his rocker. Yeah, but we believed him for a little bit, and I didn't buy Amazon. So no, I mean, very few people liked Amazon back in 2011, 2012 because it was overpriced, you know, and they don't do things. Use the product. Make sure you like the product. Be the market. You are a market wizard. The new book by Jack Swagger, I hope it features a lot of you all, because everyone here is smart enough to team up with other people in the community, yourselves, myself, other people, team up with everybody and get your hands on some knowledge. Get your hands on some knowledge. Ask other people. I ask traders all the time. If you think I just show up to the afternoon room and just spout things from my brain, you're incorrect. Very frequently, I just ask what other people want to look at, what their thoughts are, and I just kind of reiterate their thoughts. You know? So go ask, go talk to people. JS says, question for you, Jan. Valuation-wise, I read the S&P was now at a PE above 30, which would indicate we are in a stock bubble. Thoughts? No. Pretty much the answer to that question. Yep. I'll tell you when we're getting to a bubble. It was on September 2nd. Well, I wouldn't say that was a bubble, but it was hyperbolic extension of price action. Definitely September 2nd. That was too much. That was too much. That was too high. But yeah, I mean, the bubble, a big market crash, it's around the corner. I think we got 2 or 3 years left. Yeah. So Amazon, obviously we're gonna have to see what happens on election. The best case for the bulls is we do not gap down on the market tomorrow. If that happens and we open down here, one of two things happen. We either fade immediately or we have one of the most bearish Novembers of all time. Like, the market is so gorgeously set up for some strong gap downs if it happens. So I don't think it's going to happen. But if it does, you know, pick up a few shares of Amazon along the way, 1 or 2, and just let it occur. I don't think we get that. I don't think we gap down the market. I don't think it just is a tragic sell-off. I think we're just going to kind of slowly meander and hang out. But we'll see. Futures, you know, we'll find out. But anyway, Amazon's fine. I love the inside candle. I love the high wave nature of this candle. It's very indecisive and it looks pretty. 78-minute chart, Momo. There's going to be some momos triggering tomorrow, my friends. If we have some bullishness, just letting you all know. There will be some momos triggering. Can do, Matt. Can do. How many? 2? Okay. Thomas says, I remember when Truck was elected, I was salivating over the gap down only to watch it recover overnight. Yeah, it was crazy. That was crazy. Man, I'm all over the place today. I got to go in 15 minutes. All right. Snapchat. Now, I do like Snapchat. That's what Mr. Squiggle says on Snapchat. He's not wrong. Too bad right now so far. Now, Edward, why do I not like Snapchat as much as I like Pinterest? I don't use Snapchat. That's why. I understand how they make the money, but I don't use Snapchat. That's it. I don't know that much about their product. I haven't done a lot of market texting. Now, your boy Dan Jansen, he's in heavy on Snapchat. I also don't love its valuation. I mean, yeah, it could just keep running. Pinterest market cap is 37 billion, which is a lot. Let's not lie. That's high. I get it. But Snapchat is 65 billion. I mean, that's a lot. So you still have 25 billion to go on Pinterest to catch up with Snapchat. So yeah, that's all I got. Snapchat. I mean, if you're playing it, just stay along, I guess. I love Upwork. I'm really intrigued to see its earnings. We're gapping up. Well, sorry, we're flat right now, but I think earnings are tomorrow, and this thing could be a gnarly gap down if it gaps down. So Joseph, you probably want to snag some November 18 puts just in case, because that will be a gnarly town gap if it opens below here. Like everyone will be trapped. And then if it gaps up, great, right? But it looks real weak if it gaps down. Now, if it trades back down to 16-ish on Upwork, I'm getting in heavy on Upwork. Heavy Betty, I'm in if it gets down to around 16-ish. So know that in advance because it's going to happen for me if it occurs, right? If that occurs. So I'm going to put on Upwork on the list for tomorrow. Fiverr, my friends, here's me telling you this. Someone asked, what's the next Shopify? Fiverr. And here's why. Here's why. It has the exact same polarity causes that Shopify had, meaning Shopify in essence is really bullish because Canada is buying it. It's their hallmark company. It's the thing, you know? That's what Canada has to offer. Maple syrup, BlackBerry, and Shopify. What company is based? What country is Fiverr based in? Who else knows other than Pablo? Israel. Yep, they're based out of Israel. Does Israel have money? Yes, they do. And do they have anywhere to pile all their money into? Like any kind of tech company. Do they have a new tech company? Maybe that they want to put a lot of money into as like their hallmark flagship company that they can tell everyone, oh, great, we have this company. Fiverr. So be long, buy it. However you want to. Up to you. Okay. So FVRR, that's Fiverr. Okay. Intel, INTC is gapping down. Well, sorry, gap down, obviously, with the market and on earnings, back down to COVID lows. I don't think Intel just goes to zero and becomes worthless. That would be pretty outrageous to me, although anything is possible. If you adjust the chart for dividends on a weekly, we are below pretty much everything. So at this point, it's the monthly charts you need to be looking at on Intel. So it does some support. Can it go lower? Yes. You can go all in on Intel and it could eventually go higher, but it could also pull an IBM and just trade sideways forever. So if I'm looking at it on a monthly chart, it looks kind of bullish, but not outrageously bullish. I mean, 2009, lows, it went up 400%. We know 9 companies that did that since March. So, But as Pablo says, Intel's revenue is 10 times AMD and NVIDIA. It is huge. I don't think they're going to go away. Buy low, sell high. Dividends are around the corner. That's pretty much it on Intel. Alex says, what dip are you looking for on Fiverr? It's already happened, my friend. It's called a week ago on Fiverr. American Airlines, nothing happening on AAL. Nothing to really talk about or see. Nothing to see here on American Airlines. Flat as a pancake. Carnival. Come on, Carnival. So cruise lines allegedly got announced to do something to start cruising somewhere, right? I think. So Carnival, I mean, yeah. I don't think this goes to zero, but it could. It could. It is possible. This is a breakable basket. If you play a lot of Carnival, and I do have in an account 2,500 shares of Carnival, buying low and selling high, that's really it. And let's see. Let's wait it out. It doesn't look great. It does not look good. Visa looks great. Visa was a phenomenal gap today. Outrageous. And I didn't get a chance to trade it. It more or less just ran too fast and then broke higher and just kind of kept going. So this is the 5-minute chart. Bear candle, close above. And I should have just gotten in there with a stop down there. I just didn't think the risk reward was that great. And even in hindsight, it really isn't. So I missed Visa. Simple as that. I missed Visa. Long term, I really wanted off the blue line. So the blue line on Visa was where I wanted some longer term positions, but I missed it. So I'm just going to keep waiting. Going to keep waiting on Visa. All right. Next on the list, we already looked at Tesla. Apple. Nice Morningstar reversal on Apple off of the 100 simple. I do not expect Apple to go to zero. This is an unbreakable basket for a very long time. Put sale at 100. Sammy says, was there internet service on the cruise? No, we didn't use it. When I go on a cruise, Sammy, it's the one time I don't do any trading. I go to international waters to do 2 things, not trade, and I can't mention the other one. So you got to take some time off, But anyway, Apple, I like the 100 simple. I like the Morningstar. I do think it could eventually go down into 96. I'm just saying it's possible. I'm not saying it will happen. I'm just saying it will not stop at 100. Of that, I can assure you. It's either going to bounce way before 100 or it's going to go lower than 100. It's not going to go down to 100 and just boop right off of 100. That will not happen. That makes no sense. But I do have a put sale. So if it does go to 100 and closes below 100 on November, I'll get put some shares. And if it doesn't, I won't. That's it. Next on the list, Google, strong company. Oh my gosh. Earnings were amazing. Really good gap. Great looking trends. Talk about a Momo. Look at this Momo. Would you look at that Momo? I mean, exit short interlong back on October 12th, still in it. I'm not in it, just the Momo indicator. But then you got the 78-minute chart, right? Still looking pretty good. So I just say buy the dip on Google. We'll talk about all that stuff tomorrow. I think tomorrow probably will be a little bit longer class on the afternoon room. Facebook is Facebook. That's pretty much my analysis on that one. It came down to a price of which it has never come down to before and bounced ever. I wanted it at 240. I'm probably going to wait forever. Let's see how the election affects Facebook. I don't think it necessarily will, although your boy Zuck has been in Congress before, and depending on who might get in office, maybe they come after him for some weird reason. I don't know. But I want to buy Facebook lower. I'm not a huge fan of it at this exact price. I'm just waiting it out on Facebook. Edward says, if it comes down to 240, could it come down to 227? Yeah. Yeah, it could. It'll depend on the gap and the close and, you know, how the market reacts tomorrow. But yeah, if it comes down to 240, I don't think it's just going to stop dead on it. I think 227 makes more sense. AMD, weird. I would have never expected AMD to bounce here. So all I can say is cool. I mean, it's at support. So if you're buying, this is why you would buy, where you would buy, where and why on AMD. And it's a great morning star, new white soldier. Let's find out what happens tomorrow. Jason says AMD is such a good company. I agree. I agree. Another unbreakable basket. You want to buy as low as you can. Just be patient. Let it do its thing. Let's see what happens on election. Pets. I decided to hold this one over election. I don't think necessarily pets will get demolished that hard. It's not really a broader market company, so we'll see. But we're in pets. Bullish on a swing trade based on the hammer strategy. And the put sale for December looks great. DDOG, DDOG. So Datadog, some people are getting filled on some pyramids on Datadog. Makes sense to me. So if you're buying some pullbacks on DDOG, this is a pocket of liquidity right here where we are. So one of two things happens on Datadog. We begin to bounce or we break lower. Will that be based on the broader market? Yeah, pretty much. Pretty much. So it's at the 100. We have bounced here before. This is a pocket of liquidity. If you're going to break, use a protective put at 85 for November. This is probably a good time, and this is why. And we'll just kind of see what happens. Edward has a December 65 put sale. Wow. Man, you have taken some classes at some point, dude. That put sale is epic. Edward L. December. I do not have that put sale personally, but that one looks wonderful. Datadog versus Fastly. I go Fastly on that one. DraftKings. I do have a put sale on Fastly. There's a morning, sorry, put sale on blah, 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 blah. DraftKings. I got a put sale. Let's see if we can put some shares. I got 2, 30 and 45. This one expires this Friday, which looks like I'm going to get put some shares. Nice morning star. Let's see what happens. I know a lot of you are in DraftKings. I know a lot of you are underwater on DraftKings, as am I. Just going to wait it out and be patient. We'll see what happens on DraftKings, but right now, just chilling. All right, RPRX, Royalty Pharma. Will be interesting to see what happens. We are just making lower lows and lower highs, so technically this isn't a downtrend. It isn't a downtrend, so it is worth watching. I mean, inside candle, breakout or breakdown, that could be cool. We shall see. Watch it. Keep an eye on it. I'll be around tomorrow morning. I think this is a good one to put on the list for tomorrow morning. Royalty Pharmaceuticals on the list for tomorrow as a day trade. Next on the list, select quote SLQT. Nice one white soldier morning star candle. Looks brilliant. I think earnings is around the corner, but that is a great, great looking candle. Very, very pretty. And I'd have to check on earnings on that one. So Benjamin, if you want to check on earnings, let me know when they are. And we could play that one white soldier as support. So yeah, let me put that on the list for Wednesday. Again, Brad will be in the afternoon room on, they are on November 5th. Okay, so we're just going to wait then. We're going to wait on select quote for a swing trade. Brad's in the afternoon swing trading room on Thursday, and then Matt DeLong will be here on Friday. We got 3 more. Zillow. Morningstar reversal on Zillow. Let's see what happens. Looks good. This is the one I told Gene Munster on CNBC was going to outperform both Apple and Facebook in the next 6 months. Let's see if I get that one right. I will. All right. Next on the list is DELL, DELL. DELL, dude, you're getting a Morningstar reversal off the 100 simple moving average. Today is a nice little one white soldier gap that is not filled, but could. That is a very fillable gap. It is possible. Fillable gap almost sounds like the word filibuster. Really good resistance at 70.22. That's gorgeous. Nice supply resistance zones down here around 52. I would prefer to buy DELL around 55. Give this one some time. It looks a little weak. This could easily be a flag pattern that breaks lower or a bullish position that breaks higher. You'll find out within 2 days if you're looking at playing DELL. And last but not least, my boy Mark wanted to look at plantar fasciitis. PLTR and PLTR with the double bottom retest. The double bottom retest. Nice double bottom, beautiful neckline, really, really pretty. Mark says he's in at 970. Gorgeous. Gorgeous, gorgeous. Stay in, looks good. Best of luck, Mark. I love it. So before we go, I do want to mention that we do have mentorship groups tonight. Dan Jansen is hosting one that starts in just a few minutes. Is there anyone who has not had a mentorship group and cannot afford it? Post in the chat pane. Okay, so we have two people. First two people says Jay and Jenny. All right, so Jay, Jenny, message me really quick right now, immediately on Slack. Message me immediately on Slack, and I will buy you your mentorship sessions right now. And you can get in with your boy, Dan Jansen. He's a great dude. Love the guy. Great trader. So yeah, Jay, Jenny, message me on Slack. I'll get you set up, situated. And hey, love you guys. Appreciate you being here. Starts at 8 p.m. Eastern tonight. So folks, Wednesday, whew, man, it will be interesting. I will be here. We're going to talk elections and we're going to see what happens. It's just going to be a free for all. So we'll, I'll see you tomorrow. We'll look at everything. This week is just one of those weeks. So you guys rock. And until next time, love life, live life, and trade it. Bye.